Hello and welcome to this week's episode of Nucleus Investment Insights. Today's episode is called AgrInvest, Sowing Seeds for Future Profits. There's been significant inflation in the cost of food at the supermarkets, but underlying agricultural prices for things like wheat and sugar have actually been falling. Today, we'll dig into what's going on and have a broad look at the industry, dig into some individual stocks, and look at the investment opportunities. Just a quick reminder, this podcast is general advice only and is not intended to be specific for your personal financial situation. If you do want to discuss your personal situation, you can book a call with me or one of the advice team at nucleuswealth.com/contact. Today, as always, we have Nucleus Wealth's Chief Investment Officer, Damien Klassen. Damien, welcome.
Hey, Sam, how you going?
I'm well. My name's Sam Kerr. I'm the Senior Financial Advisor at Nucleus Wealth. We are normally live every Thursday at 12:30 Australian Eastern Time. Apologies for the delay today. It has been one of those days, but we are still live today. So jump onto the Nucleus Wealth YouTube channel and you can ask any questions that come to mind and we'll do our best to answer them during the show. We are also available on all other major podcast platforms, so you can have a listen there as well if you prefer. We are currently trying to fix our audio issues. We've got some new software, so if anyone's got any feedback, please let us know. We're going to put out a recorded copy in addition to the live copy. Any feedback is welcome. One other thing, we are also offering a free, no obligation super review at the moment. We'll give you a super health check. We'll give you some clarity on how you're actually invested, as that's the most important thing that's going to determine how much money you're going to end up with. We'll do a checkup on your fees, make sure you're not paying too much. And we'll also do a general overview of all the tax saving strategies on offer. So you can book in with myself at nucleuswealth.com/contact. So Damo, that is the formalities out of the way. So over to you to get us rolling.
Yeah, so agricultural investments is sort of like this. There's a whole bunch of things going on in this area, and I just wanted to sort of touch on some of the issues because I think there's a lot of different forces pushing and pulling in different directions. It's sort of a center of some of the inflation issues we're having as well. And so it's well worth sort of jumping in and having a bit of a pulse check on this sector and looking at what's going on. Now, I've grabbed a slide from Bayer, which is one of the bigger companies in the sector, just sort of looking at some of the macro drivers that they're sort of looking at in terms of, I guess, why they're pitching the sectors that they're trying to target. Now, one of them is the people 60 plus more than doubling. There's looking at a pretty decent growth in population, still another few billion people. A significant number of those people as well are in countries like Africa in continents like Africa or Southeast Asia, where the quality of life has been improving, and so the demands on food and the types of food they're looking, say in particular looking for more protein and things like that, have been increasing. At the same time, we've got some things coming through from climate change in terms of harvest losses expected. They're sort of expecting 17% losses over this through to 2050 due to changing climates and more extreme weather. And some significant losses in terms of arable land per capita as well, coming through that from a lot of that's from erosion and other factors, which some of which related to climate change and some of it related to sort of over farming. So a lot of things going on with that. We've also got a number of blockbuster drugs that are out there that I've spoken about on a few occasions in terms of that are very much targeting obesity. And so that's sort of pushing in the other direction and saying, well, there still are side effects. There still are issues that they're trying to get around in terms of those ones. But by and large, these drugs are effectively appetite suppressants. And so, a lot of the health problems we're getting in developed countries, a lot of them sort of stem back to being overweight. And so you take overweight out of that equation, and that could make a significant difference to some of the health issues. But it also then sort of comes back to some of these food issues and saying, well, if there's a significant amount of wastage going on in food and there's a significant amount of sort of overeating from a large parts of the developed world, if we have appetite suppressants and things like that that are sort of targeting to come back and literally just reduce the amount of food people are eating, then that might have a difference on some of these as well. So yeah, so lots of different sort of macro factors driving in each direction. Then we've got the inflation factors that are sort of coming down as well. So food prices for a long time have detracted from inflation, and I've got here some, or at least sort of contributed to very low inflation. So up to 2019, these are all the US numbers. I've sort of dug into the food at home. And so, over a 10-year period, you're looking at 1% inflation versus closer to 2% for the broader market. Over the 5 years up until 2019, that was you had no inflation at all, and similar over 3 years. Then you hit the pandemic, and we had this big jump. So if we're looking through to August 2023, and actually we get the next set of data out tomorrow, so I'll update these when they come out. But if you look through to August 2023. You can see that green line of where you're running at 6 and 7% inflation for almost all of the different categories within that. Over the last 6 months, it looks a lot better. There's that sort of disappeared, but maybe it's picking up again in the last 3 months. It's actually, there's a number of things that sort of started to pick up again. So that's the food inflation, I think, that people are really feeling in terms of the what you're seeing at the groceries store, and that's sort of contributing then to demands for people for higher wages, and that sort of loops through and gives you that gives you the, I guess, the cost push inflation, where inflation's high on that side, so people demand higher wages, which then means companies then put up their prices to pass on those higher wage costs, and then it sort of loops round and around. And that's what central banks are really trying to avoid. So keeping an eye on these food costs is important. Part of the puzzle, though, that sort of goes into this is that when we look back at some of the global food price indexes, and I've got a few up a few charts up on the screen that are coming from the UN, which tracks food prices across all major countries. Is that what we really noticed there is that food prices have been falling since basically the start of the Ukraine war. So more than a year and a half now of falling food prices, and quite dramatic in terms of the overall levels. So the chart on the left, you can see 2022 sort of went from 130 something up to 160 as the Ukraine war started, and from 160 it spent the rest of the year falling back down to sort of 130 something again, and this year's just spent the year falling from mid 130 to 120. So it's sort of 10%, almost 10% off in terms of overall food prices. And when you dig in, the chart on the right then digs into where's that coming from, and you can see that it's pretty broad based. Sugar has been headed in the opposite direction, but everything else, cereals, vegetable oils, dairy, meat. Meat to a lesser extent, but cereals, vegetable oils, and dairy have all been down, consistently for 18 months. Meat has been hasn't really been up, and it's been falling in recent months, and is still lower than where it was 18 months ago. So and this is a quandary that I think most people sort of sit in, is that they look and go, well, I look at these charts and you go, that's not what it feels like at the supermarket. And you look back at the prior inflation numbers, and it's obviously not coming, it's obviously what's coming through. And so what I wanted to dig in today is, let's have a look at some of the sectors that are involved within this, and look to see where we can see where are the price pressures coming through, and where are the companies that are earning sort of much higher margins than what they have in the past. And then the question is, how sustainable are those higher margins, and what's the likelihood of it continuing? So I think a really interesting place for me to start is looking at a farmer. And so I've got a chart up, and farming's quite difficult to track, sort of because different regions, different have different costs, are better at growing other crops, and then you have different weather patterns, and some places, say Brazil, you can grow a couple of you can have a couple of growing seasons versus maybe one or two at most in some of the other ones, some other regions. So this is sort of one from basically from the middle of Canada, a big wheat growing area, and what I'm looking at, the agricultural department there basically puts out all these cost guidelines for farmers to try and help them to grow the most efficient crop, and so they'll sort of back wheat versus canola versus whatever, all the other different types of things they can do, and look at how much per acre are the costs. And so these are the costs we're looking at per acre. And what I'm really sort of digging in is I've grabbed the last sort of 5 years, so back to 2019, so we can see where's been the real growth. And the answer is sort of everywhere, but there are some sort of interesting things as we follow it through. So seeds are up sort of 40% in terms of the seeds and the treatment. Fertilizers are up 130%. Having said that, this is all over 5 years. Having said that, fertilizers have fallen back over the last year. So a lot of that it has been related to gas prices, but not all of it. There's still significant other elements within that. Pesticides are that's probably been the best one. That's only up 17%. Fuel is up 70-something%. Machinery, operating and lease, now that's up 94%, which is a sort of a mixture of higher interest costs and also harder to get parts within that area. Labor hasn't gone up much at all. It's only 16% over 5 years, which is pretty reasonable. The crop insurance is up 78%, and hail insurance up 95%. So this is sort of climate change factors and partly, I guess, higher interest rates. The drying and other costs, I'm actually not sure what that's at, sort of one big jump, sort of mid time. Not much in the way of land taxes, lots in terms of storage costs, and interest costs are up almost 200% in terms of what you're paying. So that's all the operating costs, and then we look at the fixed costs. So it's actually not a bad sort of overview as well of how the industry sort of sits, and so which companies are involved in sort of which areas. So if we look at the seeds and the treatment side, that's where I might start. Actually, sorry, let me talk about the industry structure as well quickly. You do have so I'm talking about the investment type assets that we're looking at. So you've got the farmland part, which is really, there's no real listed parts, no real listed exposure to that. That's more of like an alternative asset. There are some places you can buy access to farmland, but that tends to be sort of either held directly or within sort of these alternative asset structures. There's the food products themselves that you can buy. Some companies that have the food products, but mostly the companies in that food products do a lot of processing upon the food. So if you talk about Nestle or someone like that, they're selling food products, or Campbell's Soup or Kellogg's. Yeah, they're selling food products, but they actually are doing a lot of processing, and then it's the sales and the marketing that's really sort of generating it. So the food product itself is the actual end food product cost isn't actually as large as what you might think in terms of the overall cost. And so so those parts. Then you've got these products and services, and that's all the things we were looking at, or so a lot of the things we were looking at in the other one. So the seeds and the and some of the insurance and other bits and pieces that sort of go in around that. Then you've got the fertilizers and agricultural chemicals, which is your crop protection and your fertilizers, the farm machinery, and then the sort of pharmaceuticals and animal health. And that sort of makes up, where can I, if I'm looking for exposure to this sector and I'm looking to try and get in on either the growth, or I'm trying to hedge myself against maybe rising costs, here are the these are the areas you can sort of look to invest. I might go to you, Sam, on some themes.
We'll be back with the investment insights very shortly. Nucleus Wealth is an active and passive investment manager. If you like what you're hearing and want some help with your investing, we can do it for you via our active portfolios. Our tactical and core portfolios use the insights shared in this podcast to construct and manage your investment. We blend tactical portfolios to offer our combinations of international shares, Australian shares, government bonds, and cash. We vary the asset allocation with the goal of protecting your capital in times of market uncertainty. We also have active international and Australian share portfolios. These are chosen using our quality and value investment philosophy. You can find out more at nucleuswealth.com. Now back to the show. Just one more quick thing. We just want to ask you for a simple favor. We want to spread the message about transparency, innovation, and integrity in investing. At Nucleus Wealth, we live and breathe these values. We would love it if you can help us spread that message, and subscribing to our channel will help us do that. We would be most grateful if you can hit the like and subscribe button now. And you're on.
Yeah, so if we dig in first to this agricultural products and services, now this is one area where I do think there's probably a reasonable amount of greedflation, as they call it, or certainly the companies within this sector have managed to increase their margins quite significantly. So whether it be in the seeds area, there's probably less so actually, probably in the seeds area, where you've got companies like Bayer, Coreteva, Syngenta, or some of the big ones there. If you look at some of the next ones, though, this is where I think we're seeing certainly some costs that are higher that I'm not quite sure you can completely justify, and the margins of the companies have expanded quite significantly. So the refining side, which is sort of like whether you're crushing seeds or milling wheat or doing things like that to various bits of food. So you're basically taking one commodity in and taking a markup and putting another sort of commodity product out the other side. And that's one area which we've seen some quite significant growth in terms of margins. You've got the storage and transport, similar types of companies involved in that. And then you've got sort of the trading and distribution, the companies that are sort of bulk buying, and then selling or trading around different areas, or even just using in there doing hedging for farmers, sort of in terms of the costs to help. I guess it's sort of like an insurance in the way for farmers in terms of those costs. So one of the companies, Archer Daniels Midland, has had some great revenue growth and great profit growth, and I've just grabbed a chart from Waterside Insight, just sort of showing that there's this blue line, which is the what they call the soybean board crush spread, which effectively how much do you make from crushing up soybeans. And you can see that over this sort of 20-odd year period, it's never been anywhere near as high as what it's been at the moment. So, it sort of basically cycles around zero, really, above or below a little bit in most periods, and up to sort of $5 a ton. And then, more recently, it's been more than double that. And effectively, that's and I think that's, I guess, a microcosm for, I guess, what I'm seeing in a lot of different parts of this this agricultural products and services, where the costs, I guess, partly inflation. Everyone's expecting inflation. You've sort of got that excuse you can give to your customers is, well, I'm not doing it because I'm greedy. I'm just doing it because I'm trying to pass on costs, and we're all facing inflation, and et cetera, et cetera, et cetera. But it does look as if, yes, part of this sector is doing that. If I grabbed a different company, Coreteva, which is what part of its, and grabbed its seed division. So I look at what it's done there, and so it's managed over the course of a year to increase its margin by 2.3%. So gone from making 1.8 billion to 2.1 billion, but actually it's actually selling less seeds than what it did before. So its price, it's really ratcheted its price up. As you can see on this graph, the green part, its volumes have fallen slightly. Its costs have been rising. It's had some currency offsets, but the net effect of the whole thing is they've put up prices by so much that they've managed to increase their margins quite significantly. And that's, I think, where a reasonable amount of these costs are coming through that in terms of inflation. And this is the part now that, as we're looking at these, is saying, well, some of these, there's a reasonable amount of you can get reasonable amounts of competition given time. So things like milling and crushing and other factors, they're not particularly highly complex businesses. You do need a certain amount of scale, but if the people within the business, within the markets, are making too much money on it, then competitors enter and set up operations. And traditionally, what you find is that somebody new will set up and then everyone will go to loss making or making very small profits for a little while until they start to scale back the amount of volumes. The net effect is doing really well at the moment. I always question though when you've got companies which are effectively refiners, sort of making such great profits. Then you jump to the fertilizers and crop protection. Now, this is a big market. So again, sorry, I can't remember. I think this one might have been from Bayer as well. Just looking at the size of it. So in a relative sense, if the global market's sort of 100 billion on this, the seeds and traits are sort of maybe 40%, 45% of that, and most of this is all this crop protection. And so that side of the market is doing your herbicides and fungicides and all those types of factors that we haven't seen as much in terms of the increases in prices there, but it certainly has been a feature of that market as well. Jumping to the fertilizer part, this is a part where it is much more commodity driven. And we can see that there's effectively three different big types of fertilizer: your nitrogen, your potassium, and your phosphorus. And all of those went through that some pretty hefty price spikes as the Ukraine war sort of took off, and we saw the prices of particularly for. So what's been so what we saw in those Canadian costs that we were looking at, the Canadian farmers' cost, was that the machinery costs were up almost 100% over the last few years. And that's an indication really of a couple of things. One is the shortages. So we went through this whole period where with supply chain issues that meant that companies couldn't produce as much as they wanted to produce, which meant that then whatever they were producing, they were jacking the prices up on. And then because as well in this area, because a lot of this equipment is used quite frequently, then you'd find that the getting the parts was then difficult as well. And so the price for the parts would go up. And because the machines are getting older, you can't buy new ones to replace. And so you have to extend the life of the existing ones. And so then you need more parts, and the parts cost is high as well. So the companies within this have done very well. Again, that has turned, and we're starting to see some reasonable price falls, similar to what we're seeing in the automotive sector, and a little bit of price competition starting to come back into that. But that's still got scope to go further as well. So so the big picture for me is we're looking at the sort of what I'm calling the agricultural products and services, which is the your seeds and milling and all those types of things, where we saw these big increases in prices, but they haven't really come off. And then the more commodity part of it, like the fertilizers and agricultural and machinery part, where we did see some price spikes, but those price spikes are starting to fall, and we're actually seeing genuine falls in prices now. And I might jump, Sam, back to you.
We'll be back again shortly. If you like what you're hearing but want a low-cost passive option, Nucleus Wealth is the first to offer passive direct indexing in Australia. The first generation of passive investing was index funds. The next gen was ETFs. Now direct indexing is here with significantly more customization and control. The benefit of direct indexing is you can add or subtract investment themes, and we have almost 100 different options to choose from. For example, you could buy an international share direct index portfolio that excludes fossil fuels and arms manufacturers and has a tilt towards cybersecurity and cloud computing. Alternatively, you could buy a portfolio with no screens and an extra exposure to nuclear power and defence contractors. You can find out more at nucleuswealth.com. Now back to the show.
And then the last area I wanted to talk about on the agri side is the animal health part. Now, Zoetis this is sort of largely back to one company, Zoetis, which is a healthcare stock, but focuses on animal health, and they've had some pretty significant growth for a long time, and very steady growth. So a big jump in the pandemic, but even during 2009, they had sort of 3% growth. So one more area we can look in terms of looking for investments within this sector. So we've got this agribusiness tilt that we've got that we have within our portfolios, and people can say, I want some more agribusiness, and I thought that's a good start, just to look at some of the biggest, because that's basically contains the biggest companies in that in the sector. And I thought I'd just sort of touch on that one, just to talk about some of the bigger companies and what the issues you're looking at. Because one of the good things in this sector relative to some of the other sectors is, because it's not a particularly sexy sector. There are some macro indicators obviously sort of driving in this direction, with a potential for weight loss drugs to take it in the other one, but we'll sort of leave that to the side for the moment. But what it means is most of these you can buy at sort of more reasonable prices, and picking up stocks on 10 times earnings or 10 or 11 times earnings is relatively typical within the sector, and so that's sort of about not quite half what you see in terms of the market. So it tends to be a lot cheaper. I've broken a few. So you've got CNH and Deere, which are sort of sitting in that agricultural and farm machinery part, and so they've got their certainly some growth issues and questions about, are they at the peak cycle, and so relatively cheap for both of those. But the question is over that growth and where it's going to come from. There's Archer Daniels Midland, and there's another one, similar one to that, Bunge, which are both sort of this. They sit across a whole bunch of different things within those agricultural products and services. And again, they look relatively cheap. The question for those, similar to the agriculture and farm machinery, is, are you looking at these peak earnings, or have these guys settled on something where they can actually hold on to the current earnings? Because if the question is, if they can hold on to these margins that they've managed to expand, then the companies look quite good and they look cheap, and you can get a reasonable yield on them. And with growth in population and all those types of things, that this looks like a very attractive part of the market. The flip side is, though, if they can't hold on to these margins, and it was this was just a sort of post-pandemic, managed to get through these price rises, but they're going to see the other side of it soon, then then there's that part's not as attractive. The Coreteva and Nutrien, they're more into that fertilizers and agricultural, and for companies within that sector, you really don't have a lot of control over what's going on. There's various elements in terms of the cost of your product and the marketing and all those factors, but in the end, these are sort of more commodity type products, and they are products where the farmers are pretty analytical about, if your product costs X and it's going to give you Y in terms of extra yield or whatever it is, then they're prepared to pay up to a certain amount. And if your price goes too high, then they're just like, well, it's not worth it for me to do that. I'm better off not using your product and just growing less. And so there are sort of limits in terms of what those guys can do. So then there's Bayer, which is more on that the seeds and that the agricultural products and services. They sort of end up in the pharmaceuticals category because they do have other divisions within that. They've really been struggling for the last few years. Made a couple of acquisitions that were not good. They have changed the CEO. This thing's dirt cheap, but it's basically you need to have faith that they're actually going to manage this turnaround, because they've had a number of years of really poor performance and a number of years, really struggling. And now the question is, is it a turnaround story? Is it time to buy? Certainly one at least it's interesting to us, and it sort of sits on our radar. But sort of question marks over execution is the big one there. Within the actual packaged foods part, it all comes down to how much goes into it. We've thrown in our tilt. We put in Tyson Foods, which is they're one of the biggest meat exporters within the US, and so they do a lot less in terms of the processing. It's more about the growing and harvesting of the meat and pushing it out. And then Zoetis, which is in the animal pharmaceuticals part. You do have a number of companies that have sort of popped up in terms of the Beyond Meats and a lot of the sort of soy sort of meat alternatives that have popped up. They went through a bit of a bubble in terms of prices over the last few years, and have started to come back, but they're still relatively expensive, relative to the profits that you can get from them. So that's that's a big picture of the industry. As far as I can tell, the inflation that we're seeing within it certainly doesn't look like it's endemic. It doesn't look like you're going to keep getting inflation out of this. The real question for these companies is, are we going to see deflation as the other side, as we're coming out the other side? And so, say in fertilizers, we're definitely seeing it. In farm equipment, we're definitely seeing it. The question is, in some of these other ones, will competition actually turn that back into to deflation and bring those margins back to more normal levels? In which case, as an inflationary story is a good one, but it's not as good of a story for the companies involved, obviously. Well, that might be the question of the week.
Yeah. Now we obviously have the question of the week. This is for viewers to have some discussion in the comment section over the coming days. The question for this week is, are the companies in the sector part of greedflation or a solution to it? So feel free to post your thoughts and engage with us and some of the other viewers over the coming days. And Damo, back to you for investment implications.
Yeah, so look, for me, I'm constantly looking at this sector and these sort of farming type ones to try and get a feel for when are we genuinely going to see some price falls in terms of food goods. Now we've got another batch of inflation out tomorrow, so I won't sort of preempt or US inflation anyway, which sort of goes into a bit more detail. So I won't preempt too much of that. It does seem to me that we're so we had some pretty reasonable falls up until a quarter or two ago, and now we've seen some small signs of rises in food prices. I do think that the general trend is still down. I think, especially if we look, this does seem to be a developed market issue, much more so than a developing market, and part of the reason for that is coming back to those service sectors I was talking about, and the milling and crushing, and those guys really expanding their margins. That would make sense in terms of it not that not happening in other countries, but it's still very much very much undecided, and one area we're going to be continue to watch quite closely. The companies within it, we've got a number of companies we own within our portfolios sort of in this sector, but for the large part, I'm happier to sort of step out of the way of some of these companies that have been making really good margins, and some of them look really good, but I do think there's some value traps sort of sitting in there, in that you've got these companies that look like they're cheap and they look like they've been growing really well, and truth is they have, and relative to the current margins, they do look cheap. The question is if margins revert back to normal, and I think there's a reasonable chance that will happen in a lot of these. Then the companies won't look as anywhere near as attractive.
Nice one, Damo. As you say, it's not the most sexy sector, but I think it's on lots of people's minds. And one of our viewers, V Dark, he's saying it resonates with the masses. I think lots of people are feeling the pinch at the supermarket. So yeah, really, really interesting topic. So thanks for putting it out there again.
Thanks, Sam.
Excellent. So we do welcome your feedback on this podcast, especially in regards to suggestions for future topics. If you do have any ideas, drop it in the comment section below or send us an email at contact@nucleuswealth.com. Also, if you know of anyone that might get some value out of today's episode, we'd really appreciate it if you do share it with them. So from myself, Damien, and the rest of the team at Nucleus Wealth, thanks for watching, and we look forward to seeing you next time. Bye for now.